Hello, everyone. Welcome to the Money Hour Radio, a show where we try to help you grow your money, pay less taxes, and have a beautiful retirement. What could be better than that? This is a show where we talk about the economy and the stock market. We talk about bonds, how to cut taxes, estate planning, Social Security, interest rates, the Fed. If it has to do with money, we talk about it right here on the Money Hour Radio, and we're going to cut through all the noise and focus on what really matters to you and your money. I am one of your co-hosts, Ben Barzideh. I have my co-host, Matt Nadeau, here.
Hey, everybody.
And we are both founding partners and wealth managers at Barzideh and Nadeau Wealth Management, a comprehensive financial planning firm located locally right here in Barrington and serving the greater Chicagoland area.
And as always, we're going to take a moment to say hi to all of our clients who are out there. We know you're listening, and we appreciate the trust that you place in us, and we love every one of you. And we have a great show planned today. It's a little special. We've got a few topics. First, we're going to dive in. We're going to talk about one of the big, most important things that happen at least every quarter is Nvidia. They came out with their earnings. We'll talk about it. And then we're going to talk about our favorite Fed chairman, Jerome Powell. And of course, Jay Powell, he had some comments last week. And really, we want to ask, was he that bullish? I mean, Friday last week, the market took off on his comments. So let's talk about that. And then later in the show, we have a very special segment. We have a guest coming in, Ken Piercey. He's from Piercey and Associates. He's a really well-renowned local estate planning attorney, and he's going to dive into some really important estate planning considerations and also some of the impact that the Big Beautiful Bill Act had as it focuses around estate planning. This is going to be a great segment later. You don't want to miss that.
But before we start, we also encourage you to check out our BN Wealth social media page for any interesting updates and timely news during the week. You can also follow us on Facebook and Instagram. Lastly, please subscribe to our weekly economic update newsletter that's called the 5-Minute Market Brief. It's extremely informative and something you can sign up for right on our website at bnwealth.com.
Yeah, Ben, I mean, a lot of our clients rave about that quick 5-minute market update we send every week. They love it. It's easy to read. It gives you what the information you need to know, what we're watching for. So please go to the bnwealth.com to sign up. And again, before we dive in, I want to wish everybody a happy Labor Day weekend. For those of you who are college football fans, just saddle up. This is going to be a great weekend.
No better time of the year.
That's right. Well, let's get into our topic. And, it really was a more relatively light week, although we were highly anticipating the Nvidia announcement for their earnings. And you know what? Guess what they did? They crushed their earnings again. But here's the thing. The bar has been set so high for them that it's just not impressing the analysts enough. I mean, their stock was still relatively flat, even though they crushed earnings. So the chip makers' earnings and sales were expected to jump by 53% from a year ago to $45.9 billion. Well, guess what? They reported $46.7 billion in total revenue, 56% rise year over year, with, again, a corresponding rise in data center revenue. So analysts were still hoping there'd be a little more in revenue, and it was 41.3 billion they wanted. The company only reported 41.1. And additionally, the company announced a 60 billion with a B share buyback program and issued guidance of another 54 billion for next quarter. So out of the last 12 financial reports, Nvidia has actually topped estimates 11 times. The stock's now up 30% year to date. And in July, guess what? Nvidia was the first company to ever hit a $4 trillion market cap. But they're the poster child.
What a tough quarter where you increase your sales by over 56%, and it's just not good enough. About a year and a half ago, though, they were coming in at a 300% increase quarter over quarter. But still, at some point, it's going to slow down.
It's like, if you're going out to, pick up your date for the first time and she's still beautiful, but, it's just like, one curl's out of place. You're like, "What's going on here?" Like, it's still pretty darn good.
Just not good enough.
That's
No,
right.
it's it's a remarkable company, and I think the future is still very bright for AI. Now let's pivot a little bit and talk about were Jerome Powell's comments really that bullish? And markets surged right at the end of last week, if you remember, it was Friday of last week, following Powell's more than dovish than expected comments at the Jackson Hole conference, as his willingness to a September rate cut helped fuel aggressive rate cut assumptions, which really helped propel cyclical sectors and many indices, as well as just the broad-based markets up. And the S&P was actually up 2% on the day, and the Russell 2000 was up almost 4% at 3.9. So given the huge rally, it's reasonable to think that Powell maybe introduced a new bullish catalyst to the market. But what's interesting is, in our view, that is actually not the case. In reality, all Powell really did beyond the short term is reinforce existing expectations for a September rate cut. And remember, Fed Watch had those odds at nearly 100% pre Powell. And the reason Powell's comments sparked that rally was because they helped diffuse what was pretty hot inflation data coming out during the week and really for most of August. And these include the CPI that came in kind of hot, the price indices in the August flash PMIs, as well as some insight from retailers, Walmart especially, which said that tariffs are now pushing prices higher, and that will continue for the next few months.
Yeah, I think everybody was gearing up for the stomach punch from Powell. It's almost like he's like the guy who shows up to give you bad news. It's like the doctor with bad bedside manners, and you're like, "Wow, actually, it was kind of pretty nice."
First time I've seen him talk and the market went up.
Yeah, we were like all gearing up for a bad weekend. We're like, "Ah, Powell's talking on Friday," but no, it was beautiful.
At this point, it's a little PTSD.
That's
Every time the
right.
guy talks, we get ready for a drop in the market.
Yeah, well, it didn't happen this time. And
Yeah, no,
actually,
no.
it was him signaling this openness that they were going to still have a September rate cut. And it really pushed back on some of the concerns that we saw with inflation. And when we look at that, that's a positive recipe for stocks in the near term. But in our view, the risk profile for this market has not changed beyond the real short term. And in reality, it's probably a bit worse than it was because stagflation risks are actually rising, not falling. So again, we've seen price metrics with upward pressure. We see the labor market showing a little signs of losing momentum. If we're looking at continuing jobless claims, the monthly job reports, those are going in the wrong direction. And from a market standpoint, we don't like view these risks as enough to panic and get more defensive. All of our signals are positive right now. So we're not saying panic and get out of the market, at least for now. However, we do think it again speaks to the need for balance as you're looking at your stock portfolio, making sure you have an exit strategy, making sure you have solid cyclical exposure, maybe some industrial, financial sectors, materials. And again, AI is driving this economy in the market. So we have AI large cap US stock like mega cap tech, consumer discretionary, and utilities.
By the way, like almost all of those positions are currently what we have in our advanced and protect tactical portfolios that we manage for our clients, plus the Magnificent Seven stocks. And currently, the stagflation concerns aren't big enough to really disrupt the rally, but we will be monitoring them closely going forward. And we will, of course, let our listening audience know if things change. That is our commitment to you. And we don't want anyone listening to us be blindsided by some of these rising risks, because if we do get a stagflation concern or a scare, the S&P 500 could easily fall by 5 to 10%, and even more if we actually do get some stagflation. But for now, enjoy this rally. We sure are. And in fact, in some of our client portfolios that are more growth oriented, we are currently pedal to the metal at 100% equity exposure, since all of our buy and sell indicators that do a diagnostic check of the health of the market, they're all positive right now at the same time. So to us, that means that based on our research, it's a good time to be in the market and the chances of a market crash are low. And the reason we feel comfortable to increase stock exposure all the way to those higher levels is because we actually monitor our investments every single day. Therefore, we can quickly slow things down and get defensive if we need to. And as the market gets riskier, based on our research, we will actually sell out of the equities, the stock areas, and invest that money in bonds. And if bonds are not doing well, we'll just put it in cash while we wait for conditions in the stock market to improve so we can go back in.
Yeah, Ben, we call that advance and protect. You can learn more about it if you go to bnwealth.com. Just go to the website, bnwealth.com, or call us at 847-780-2980 if you want to learn more about how we work with our clients with having an exit strategy, an ability to go more in the market when things are good or get out when they're bad.
Welcome back. Thank you for tuning in. This is the Money Hour Radio, a show where we try to help you grow your money, pay less taxes, and have a beautiful retirement. What could be better than that? Well, we have the honor today of hosting our guest, Ken Piercey from Piercey and Associates, a very esteemed and well-known estate planning law firm located right here locally in Barrington. And we've actually had the privilege of working with Ken and his father, Rodney, for many years now, and have sent a lot of our clients over to them for their estate planning needs. They are extremely knowledgeable, ethical, and share our same vision for giving back. So, Ken, hello there.
Hello, hello. Very nice to speak with you today.
Thank you. But, well, first of all, thank you for coming in today. And before we start, did you want to just please maybe take a few minutes, share with our listening audience a little background on you and your firm, Piercey and Associates, and what kind of legal work you help people and your clients with?
Absolutely. Thank you. So yeah, Piercey and Associates really focuses on estate and tax law. We do have a real estate practice as well with 2 real estate lawyers. And we've been in business since 2010. My partner's been practicing law for over 50 years. He was a partner of another law firm before we started Piercey and Associates 15 years ago. I've been practicing law for 15 years in estate and trust areas. And yeah, we just have a lot of fun. We really just want to treat people the way we want to be treated. And yeah, basically, that's a summary of our
No doubt.
background.
Well, we've had nothing but good feedback from our clients that have worked with you guys over the years. So,
Great
but
to hear.
so the topic today, we want to just talk about some of the estate planning considerations, the hot button areas that people should know about. We're going to get into a little bit about the Big Beautiful Act, maybe some of the updates to estate planning laws. But the first topic we want to talk about is probate. And that's an area that many people may not know a whole lot about. But did you want to explain to us, Ken, what probate is, what the law is
Absolutely.
regarding it, and especially since we're in Illinois, but obviously we're close to Indiana and Wisconsin, and maybe talk a little bit about them.
Yeah, I definitely hit on all 3 of those states. So Illinois, we'll start with Illinois, but in general, probate is a court case that's required when somebody passes away. And I would say they don't have an adequate estate plan. The most common trigger would be, owning a house in your name alone or with your spouse and you both passed away. That's probably the most common cause of a probate case. And a will helps provide clarity, but it doesn't avoid probate. That's a common misconception that I see. Um, and yeah, it's basically a court case. It takes, anywhere from 6 months to, it could drag on for years and years, but it's really the legal process where someone gets appointed to be responsible to manage, collect the assets, sign the tax returns, and make distribution under the will or to the heirs, as the case may be. So that's basically probate in a nutshell.
So basically, so it's something where before people's heirs can get their money that's rightfully due to them, they actually have to go through the court system and get
They
the
gotta
court
wait. If a
involved.
probate's
Yes.
required, they gotta wait. That's right.
No doubt. So Estate planning 101, obviously, you're the expert in it. But even in our area, when we learn about estate planning, one of the first things we learn is you want to avoid probate, correct?
Yeah, that's generally what people want. You know, when I meet with clients, the vast majority of people don't want their kids to have to deal with a court case.
Of course.
So they create a plan to avoid that.
Now, I know we're going to get into the thresholds a little bit, but well, actually, go ahead. How about we talk about the thresholds, and then maybe we come back very briefly right at the end and talk about ways they can evade probate.
Makes sense. So yeah, threshold. Illinois just passed a law. It became effective August 15th of 2025, just not long ago. It used to be for people dying before August 15th, it was a $100,000 threshold, which included vehicles. But now for people dying after August 15th, the rule now is $150,000 in estate assets, which would be assets in the deceased person's name alone, no beneficiary, not jointly titled. If that's the case, then it has to go through a formal probate case in Illinois. If it's less than that amount, there's an affidavit procedure. Sometimes you still have to go to probate if there's like people aren't agreeing or somebody takes issue with what's being done. But generally speaking, that's the threshold. Still, no real estate is allowed in Illinois. For our Wisconsin listeners, the threshold amount is 50,000. But interestingly, in Wisconsin, that can be a lot. Like you could have a real estate property, you know, most are worth more than 50,000, but if all you had was a lot worth $40,000 in your name, that could be handled through the affidavit procedure in most cases.
I see.
But that's really total estate asset value has to be 50,000, less than 50,000. Indiana is 100,000. And it also cannot include real estate. So the rule in Indiana is $100,000 less than that and no real estate, very similar to what Illinois used to be.
Got it.
So that's basically the threshold requirements. Once somebody has more than those thresholds, they need a court order typically to be able to sell the real estate or access the assets.
And that's very important for our listening audience to understand. So it doesn't take a lot of money to get you in that realm where you may have to deal with probate. You don't have to be a Wall Street fat cat or be a multimillionaire. I mean, any property these days is easily over that figure. So how can people avoid probate?
Yeah, the most common is with the use of a trust. In my experience, that's the best way to avoid it is create a trust, create a clear plan. The trust plan typically involves wills, powers of attorney to address incapacitation and guardianship issues. And you got to make sure that the trust owns things. So a deed on the house into the trust, making sure the trust is the beneficiary on the accounts. You can also have the trust be the owner on the accounts, but that's the best way in my experience. Some states allow a transfer on death instrument. Illinois allows that as well. There are potential pitfalls with that. You can only handle real estate. It's client dependent, but the best and highest protection would be the use of a trust because there's a lot of protections you can build in to the document.
Absolutely. Good, good, good. Now, let's pivot a little bit and talk about the next level of things people may have to worry about. Not just probate, but if your net worth, if your state actually gets big enough, you may have to worry about some other things. So, can you maybe talk about death taxes, maybe state taxes,
Yes.
how that may have changed under the new tax law, the big beautiful bill?
Absolutely. So we'll start with federal and then I'll touch on the states. The one big beautiful bill act, OBBBA,
That's a tongue twister.
signed July 4th, 25, basically repealed the 2017 tax cuts that was actually going to be expiring. So the bottom line is the federal estate tax, this is all 50 states. In 2025, if somebody passes away, the number is 13.99 million. So a very large number, highest it's been in recent history. So it's an opportunity for people that have more than that to do some strategic planning. But most people don't have that amount. But if they do have that amount, it's a pretty heavy tax over that amount. Basically, any amount over that gets taxed. And if somebody's married, there's a portability election. That amount can often be doubled for a married couple. Generally speaking, we like trust better than relying on the portability election. But that's the big picture number, 13.99 million for decedents in 2025, and the OBBBA Act that set the rule for 2026 decedents to be 15 million. So 13.99 exemption federal for decedents in 2025 and 15 million for decedents dying in 2026.
So
And that could be
basically,
doubled as well under the portability or
so
trust.
basically, a husband and wife can shelter basically 30 million or
Right.
very close to it. What
Yeah,
happens
under
after that?
federal. Exactly,
federal.
under the federal rules.
What happens if someone has more money than that?
Yeah, well, then it gets taxed. Yeah, and it's the estate tax,
Just
the federal
clobbered.
estate tax amount. It's pretty heavy.
It's
It's
easily
basically
40%, right?
yeah, it's the percentage is it can be up. It's 40% is the top rate, so it's not hard to get upset about a tax that's 40% over the amount. So it can be pretty brutal.
No one feels sorry for trust fund kids. Always tells
That's true. That's true.
that's the easiest place for our politicians to get tax revenue on is death taxes, because one, you're gone, you're no longer there to dispute it, and then your kids, like I said, no one feels sorry for them. But I know it's different at the state level. So people listening to us right now might say, okay, well, 30 million, geez, I obviously don't have that. Why does this affect me? I live in Illinois. Well, it's a little bit different at the Illinois level, right?
Yeah, so Wisconsin does not have an estate tax. Indiana does not have an estate tax. Illinois, the threshold is 4 million. And they don't have a portability election, so it doesn't double automatically without additional planning. So yeah, and that it's not the easiest way to calculate, but it's a graduating scale. But a simple hack would be basically a 25%, roughly 25% of anything over the 4 million exemption would be due to the state of Illinois within 9 months of death. Might be a little bit higher, might be a little bit lower than that in actuality, but that's a kind of a typical tax that someone would be paying if they passed away out of their estate assets. And as a resident of Illinois, meaning they spend most of their time here.
And there's ways to help remedy that, right?
Yes, a two trust plan will properly drafted will double the exemption to 8 million. And then there's about 70 other strategies to eliminate it on the rest or greatly reduce it on the rest of it.
Got it. Well, we are close to being out of time. Now we're gonna have Ken on more going forward to talk about different parts of estate planning. Today we just want to take a big picture view on it. But Ken, I want to thank you for coming in today. Ken Piercey of Piercey and Associates. For any estate planning needs you may have, you can reach them online at pierceyassociates.com or call them at 224-848-4646. Ken, thanks so much for coming on.
Thanks, really appreciate it.
Great. And folks, before we wrap up, we want to thank you for listening today. We just want to announce that we are having our Client Appreciation Gala coming up at the end of September. It's going to be a night of fun at a very fancy country club. We're going to serve wine, dinner, California Dreamin' Client Appreciation Gala is what we call it. We have a Beach Boys band. You got to be a client to come. You don't want to miss that. So go to our website at bnwealth.com and sign up, or call us at 847-780-2980. All right, we're out of time. God bless you, and we'll see you next week.